Hello. Okay, we're just going to go ahead and continue on with this one. So we go ahead and subtract it. Apologize that I had to pause on that one. But we go ahead and get this in. So put that in the calculator. Okay, so we get, remember, if we get a negative amount, so it's $533 owed. Okay, so she owes $533. Okay, so that's how much she would owe in taxes. Okay. It says Adriana is a single taxpayer whose income is $79,290. She could reduce her total income by $995 by filing a Schedule A. Remember the one we went over in class? Use the filing rate below. Okay, so you want to subtract her income first. Okay, so we basically subtract that first. So the 79,290 minus the 10,945. So go ahead and subtract that first. Whoops, glare. Okay, so go ahead and subtract that. Okay, so we get 68,345. Okay, so then everybody will look at where that one would be, and it would be right here between those two intervals. So we're going to use this one. So remember, that means we're going to put it in this one. So it's going to be $4,481.25. Remember, to the left. And then I'm going to insert the income in here. So the 68,345 minus the 32,500. I will rewrite it over here just to make sure you guys are really clear on that. And you are just going to put it in the calculator like this. Okay, notice that it is a subtraction and that there is a couple steps. So make sure you're reading carefully. Okay, and we just go ahead and put that all in the calculator. So go ahead and put that in. So we get for her tax $13,430. So that is her tax. Okay, so that is the answer for that one. Hey, next page. Okay, Sharon and Dave have combined income, okay, of $87,634. They have 1099 forms which report $1,800 in interest, $5,095.45 from her income from a rental property. They can reduce their income by $4,800. What's their adjusted gross income? Okay, so we're going to do adjusted gross income, AGI. We start with their combined income of $87,634 plus interest, so the $1,800 plus the rental property income minus their reductions or their deductions, as we call them. Go ahead and put that all in the calculator. So their adjusted gross income is $100,000 $179. Okay. Always make sure that you double check your answer and make sure that you didn't put minus like I did. Make sure I was putting in all pluses, so it actually should be 90,579. Okay, so it says Magda's reported wages, so this is her wages of $41,231. She contributed $52.95 bi-weekly to her flexible spending account and 10% of each paycheck to her retirement plan. She received a 1099 form in the amount of $700 for an employer. She did some consulting work. And what is her adjusted gross income? Okay, so that should be over here. Okay, so her yearly flexible spending account, remember every bi-weekly means 26, so $52.95 times 26 for her retirement. It's going to be 10% as a decimal times her total wages. And then her additional income, that would just be the $700. If she had any interest, you would add that to the 700. Okay, so $52.95 times 26. So you get $1,376.70. 10% times 41,231. So we get $4,123.10. What is her adjusted gross income? So we're going to do that. So her AGI. Okay, so we start with her income. So the 41,231 minus her flexible spending account. Remember, she doesn't, it's tax exempt, so she doesn't have to pay taxes on it. Okay, minus her $4,123. She doesn't have to pay taxes on the retirement until she retires. Okay, and that will be, we put that in the calculator, and that is going to give us her adjusted gross income. Double check your numbers. So definitely double check your numbers. Make sure you have everything in there right. And I got 36,431 and 20 cents. Okay, so that would be her adjusted gross income. Okay, medical expenses. So Alex had $9,500 in medical expenses last year. The IRS allows it may not exceed, if it exceeds 7.5% of the taxpayer's adjusted gross income. If his adjusted gross income was $28,000, how much can he claim? Okay, so remember in class, so we said, sorry, I'll start back to medical expenses paid minus the adjusted gross income times 0.075, so 7.5% is a decimal. Okay, so we're going to use that formula. So I'm going to put the 9,500 minus 28,000 times 0.075. Go ahead and put that in the calculator. So we get 7,440, and it's a positive amount. So that is how much he can claim, okay, as a medical deduction. Okay. Kind of looks like a bat. Okay, there we go. Okay, John had $2,300 in medical expenses and does not have medical insurance. The IRS allows deductions that exceed 7.5% of the taxpayer's adjusted gross income. If his adjusted gross income is $32,000, how much can he claim? So everybody has to remember it's going to be medical expenses paid minus the adjusted gross income minus the 7.5% is the decimal. Okay, so we're going to go ahead and put that all in. So the 2,300 minus the 32,000 times 0.075. Go ahead and put that in the calculator. And I get negative 100. Okay, so remember, since it's negative, okay, so if it's a negative amount, you can't deduct any, so it's zero. Everybody, okay, so it's zero. That is how much he can claim. Okay, so how much can he claim? Everybody is zero. Okay, so zero, none of it. Okay, on his medical expenses. That's it for the review. Thank you.